Stop guessing. If you're still trying to feel your way through a real estate deal, you aren't an investor, you're a gambler. And in the 2026 market, gamblers get crushed. The difference between a top producer and everyone else? The data. Top producers don't fall in love with a property's potential. They fall in love with the numbers. If the numbers don't work, they walk. It's that simple. But how do you get those numbers? You use the right tools, specifically a real estate investment calculator. This isn't just a fancy spreadsheet, it's your shield against bad deals and your roadmap to wealth. Are you ready to stop the guesswork and start building a real portfolio? Let's dive in. Most people fail in real estate because they overestimate income and underestimate expenses. They see a $3,000 rent check and think they're making $3,000. They forget about the property taxes, they forget about the 5% vacancy rate, they forget about the $400 plumbing emergency that's coming next Tuesday. A real estate investment calculator forces you to be honest. It's the cold, hard truth that keeps your bank account from bleeding out. It's the ultimate asset for anyone serious about the game. Before you even open a calculator, you need the facts. Garbage in, garbage out. If your inputs are wrong, your ROI is a lie. Here is what you need to hunt down for every single deal. Once you plug these numbers in, the calculator is going to spit out a bunch of terms. If you don't know what they mean, you're flying blind. Here are the 4 metrics that actually matter for your success. This is the holy grail. It measures how hard your cash is working for you. This is the property's natural yield without debt, the quick and dirty screening tool. This is the meat on the bone. Let's walk through the workflow. This is what I do every time a listing hits my desk. Run the GRM. Does it pass the smell test? If yes, keep going. If no, toss it. Open your calculator. Input the purchase price and your estimated closing costs. Don't forget the buffer for immediate repairs. Look at the comps. If the seller says it rents for $2,500 but every other house on the block is $2,100, use $2,100. Always be the pessimist in your spreadsheet. This is where most people fail. Did you include property management, usually 8-10%? Even if you manage it yourself, you should budget for it. Your time isn't free. What is the cash-on-cash return? Is it 8%, 12%? Does this meet your goals? You don't need to build a custom Excel sheet from scratch. There are world-class tools waiting for you right now. I see it every day. An agent or investor wants a deal to work so badly that they start tweaking the numbers in the calculator until they see a green light. They lower the vacancy to 2%. They forget to include maintenance because the house was renovated last year. They assume 10% appreciation every year. This is called hopium, and it's the fastest way to go broke. A calculator is a tool for logic, not a tool for validation. If the numbers tell you it's a bad deal, believe them. The best deal you ever make might be the one you walk away from. Mastering the calculator is step 1. But real success comes from the network you build around those numbers. You need the mortgage brokers, the contractors, and the fellow investors who are actually in the trenches. Are you ready to stop playing small? We're breaking down the California market, sharing the latest mortgage broker insights, and building the mindset of the top producer. The market in 2026 is moving fast. If you aren't calculating your moves with precision, you're already behind. Unlocking your first deal is just one calculation away. Are you ready to run the numbers?